Hello and welcome back to our channel. As beginning, I want to thank MEXC for making this video possible. For all of you that don't know, MEXC is one of the largest derivative crypto exchanges. If you want to support the channel, you can just open an account via the link in the comment section below. So let's go on with our topic. Today we are going to discuss about how to use the futures trading properly. So let's begin. So in order to trade with futures trading properly, this is what we should do. As beginning, we have to know that this is the amount that we are going to risk for each trade. The optimal risk for each trade is between 1 and 3% of the account balance. This is a type of standard that is used in the market. Most of the time I used to trade with a 2% risk of the account balance. So in my opinion, this is very useful because this is going to limit your risk of trading. So let's suppose that we have $5,000 in our account and I'm going to risk only 2% for each trade. So the reason after this is that we are not going to trade with all our account balance, but we are going to risk only a specific amount. In this way, for our first trade, we are going to risk only $100. So considering that futures trading are a leverage product, we are going to leverage this amount and this is going to be bigger, but this is the maximum that we can lose from our account. The normal problem that many traders have is that they are going to trade with the whole account balance. This is the biggest mistake with futures trading because you are exposed to the risk that you may lose all your money. So let's suppose that after some trades, some wins and some losses, you are going to have $6,000 in your account. Let's suppose that we didn't change the risk during this period of time, and after this moment we want to look at our risk for each trade again. And in this situation, 6,000 multiplied by 2%, the new risk for each trade is going to be $120. So this is how we calculate the risk for each trade. In our example, in the new example, we are going to risk $120 for the account balance 6,000. If our account balance is going to decrease, let's say 4,500, then we have to adjust the amount that we are going to risk for each new trade, and this is going to be $90. So this is used all the way when we are going to trade. This is the way how we use the futures trading properly. So now we are going to look at a real example in MEXC platform. Let's suppose that you already have logged in on your account. For futures trading, you have to go on futures and click on USDT-M. After this, you will see that the platform will load and you are going to be able to choose the cryptocurrency pair that you want to trade. So let's suppose that I'm going to use Ethereum for my example. I would like to change also the colors according to my chart. I would like to change them. It's very user-friendly platform, as you can see. And here we have our trade. It's very easy. Just one moment. Okay, so this is my trading. And now we are going to look at how we are going to open the position. So with our $100 risk for each trade that we are going to begin, we need to plan our trading strategy. So let's suppose that my style of trading is breakout trading, and here we have our pattern on Ethereum. This is the pattern that I was looking at. Here we had it. Price was ranging within these 2 points. Just let's make it a bit cleaner here. And in these 2 points you will see that we have a very strong breakout. So price is actually developing at the lower part of the structure. According to my analysis, I am actually expecting that the price should move lower after it will retest this area, and the probability is very high that it will test the small structure and it can continue also lower. So let's make it in this way. This is the part that I want to focus right now, because we are going to take targets. This is the first one, and this is the second one that I need to pay close attention to. So let's suppose that probably I don't want to open my position in the actual place where the price is right now. So I don't want to open my position in this area, but I want to open my position a little bit higher, probably on the upper part of the structure. So it comes close to 1042. So we build up also our trading scenario, and now I'm going to place my order. The stop loss that I want to use for this trade in this scenario should be above the stop here for an aggressive stop loss, or probably above the pattern for a more conservative entry here. So according to my trading style, I would like to have my stop loss at 1309. This is what I would like to see. The entry point that I'm actually looking at will be in this area. So let's make it with green. 1243, and the price should continue lower after that. So let's go in our trading platform. I'm going to look at the left side right now. As you can see on my future trading part, I don't have anything at all. So what I'm going to do right now, I'm going to press transfer, because we have the funds on our spot trading. And you will see that I can transfer from spot to futures $113. So I want only 100 for this trade. Let's suppose that this is the amount that we already calculated from the risk amount, that we suppose that we have a $5,000 account, and the 2% risk for trade was 100%, was $100. So this is going to be my account. So this is going to be my amount at risk. I'm going to transfer this on my future account, and here we have $100. And I'm going to place my stop loss, my selling order at 1042.43. So let's go on the other side of the chart. I'm going to change the price here, 1243. We have the margin that we may use. The margin that we need to understand, if I'm going to risk $100 and my leverage is going to be 20x here, it means that I'm going to have 20 times my amount that I'm going to invest. 20 multiplied by 100, it means that I'm going to invest $2,000. These are taken from the broker. So this is how the leverage works. So let's say that I want to decrease it to 10 probably, and I will show you why. I'm going to decrease also the isolated margin, and after that I want to sell here. So as long as I'm going to sell, I'm going to place all my amount, and with $100 and the 10x margin, I can sell 0.79 Ethereum. I'm going to press the short take profit and stop loss, and you will see the trading panel here. If I'm going to press directly sell now after placing 100% the amount and also the selling price, you will see a new window. This window is going to show the price of liquidation. Here we have our entry price, and even if I'm not going to use any stop loss, the estimated liquidation price is 1,362. So this is the point where my position will be closed from the system if price is going to move above this area. So this is how it works out in this way. So it was 1,362. So in my opinion, this is too much. I want to make it smaller, and it means that I can increase the margin here in order to make higher profits. So in this way I'm going to increase the margin. Probably let's try to 15. This is an easy way that I'm using. Let's confirm this. Let's change also the next one. And you'll see that if I'm going to press open short again, this is slowing down to 1,320. But now we are using a 15x margin. It means that we increase the margin to $1,500. So we are controlling $1,500 with only $100. Let's suppose that all is fine here. I'm placing open shorts and I'm placing confirm. At this moment you will see that the price, the sell order here is actually active, and when the price will reach our selling price 1,243, it will be activated and the stop loss will be 1,320. So at this point, so it looks really good. I left by purpose the profit target here. You can see that I didn't place, so I can come on the open orders. This is an order. I can open it and I can place the take profit. So let's suppose that our take profit was 1,200, and you will see that at that price level I can make $50 here. If price is going to move lower, so let's say I want to use only the second target, 163, I'm going to make $94. So this is how this order works out, and it is very easy. It works in the same way for the long and the short position as well. So hope you guys enjoyed this explanation, how it works out and how you can manage the risk for each open trade for the crypto futures trading. Thank you so much. Please don't forget to subscribe and press the like button for more future content. Bye bye.